So you want to raise serious capital. I'm talking 20 million, 100 million, 500 million dollars or more. Well, alongside our advisory network responsible for over 37 billion in capital raised, we've helped founders close institutional rounds from seed to 100 million dollars and beyond. So if you could just focus for the next 27 minutes or less, I'll give you a simple 3-step framework for raising institutional capital that you can implement as soon as today. Now, if you're wondering who I am and what qualifies me to say any of that, my name is Samuel. And I'm fortunate enough to lead an all-star capital advisory team whose collective experience spans over 37 billion in closed raises across sectors like tech, real estate, energy, healthcare, and many more. I've been blessed to work with companies from pre-seed all the way to 9-figure exits. And I'll tell you straight, raising capital isn't actually all that hard. You just need to know what investors are actually looking for. So here's what you're about to learn: how to identify and target billion-dollar capital opportunities instead of wasting time with investors who will never write checks, the 3 pillars of institutional capital alignment that separate funded companies from absolutely everyone else that's still pitching, how to structure and position your raise so investors compete to get in instead of you begging them to consider you. And look, you might be wondering, why would this guy give this away for free? It's simple, because I've seen what happens when founders get this right, and most of you will never implement what I'm about to share anyway, so what the hell. But for the 5% of you who do, you're going to completely transform how you think about institutional capital forever. So grab something to write with and let's dive in. Targeting billion-dollar capital opportunities, specifically the right investors. If you're aiming to raise 20 million, 100 million, 450 million dollars or more, the first thing you cannot afford to do is spray and pray. So stop mass emailing 500 random VCs and hoping that someone says yes. That's amateur hour and an instant blackballing from the club. Real institutional investors have mandates, specific rules around what size check they write, what industries they care about, what traction signals they expect to see, where they're geographically focused, what stages they enter in, and most importantly, what kind of risk narrative they're willing to entertain. Let me show you a quick tool I call the Mandate Alignment Filter. It's how you make sure every investor you pitch is actually capable of funding your deal. You want to filter potential investors through 3 non-negotiable lenses. Number 1, check size. Do they deploy checks in your target range? If you're raising $40 million and they top out at $5 million, it's a dead end. And number 2, sector focus. Are they active in your industry right now, not potentially interested right now? Investment thesis. Does your business model match how they think about growth? Now, pro tip, don't just Google investors, use real tools. Pitchbook, if you can afford it. Crunchbase, even LP annual letters. Those tell you what these firms are actually funding, not what they say they want. Now, one of my clients last month used this exact targeting approach. He shaved his list from 148 contacts to just 12, and then closed 2 of them in under 45 days. Why? Because they were perfectly aligned from the beginning. Let's move on to phase 2, institutional pitch infrastructure. Package yourself for institutional capital. Once you've found aligned capital, you need to look the part. Institutional money doesn't fund potential, they fund inevitable outcomes, as we talk in all the other videos. This is where most founders absolutely blow it. They show up with a pitch deck that's too long, too wordy, too vague, or designed for demo day, not diligence. A messy cap table, 0 understanding of capital structure. Here's how we fix that. The 3 pitch pillars. Number 1, problem validation. What's broken that people pay to fix? Market opportunity. Why now? Why this space? How big is the prize? And execution certainty. Why are you the one who wins? Showcase your team's ability to deliver results and overcome obstacles. So for our clients, we always reverse engineer our pitch deck around these 3 core narratives. It's how you go from interesting to where do I send the wire, which is where you want to be. And don't forget your data room. This is where most founders stall in diligence. Here's what needs to be in it from day 1. Clean cap table. No uncle's friend from 2016 with 7% equity. Use of proceeds. Breakdown 35-year forecast. Financial model with defensible assumptions. Remember that. They will slay you if you don't do that properly. Formation docs, contracts, any LOIs or strategic agreements. It's the invisible credibility engine that shows investors you're not winging it. And as I say here, your deck isn't to raise money, it's to get meetings. Focus on creating intrigue and demonstrating credibility rather than overwhelming with details. We talk a lot about that in the pitch deck series. Now, I know what some of you are thinking. This sounds great in theory, but how do I actually execute this for my specific situation? And that's exactly why I put together something called the 100 Million Capital Campaign Blueprint. It's what you're seeing here on screen, and it's a complete step-by-step execution guide that shows you how to identify the right investors, structure your raise, and run a coordinated capital campaign, even if this is your first institutional capital round. Now, inside, you're going to get the exact investor research frameworks that we use to identify high conviction capital, real pitch deck templates designed for $100 million or more institutional capital raises, email and outreach sequences that actually get responses, due diligence prep and term sheet negotiation insights to protect your valuation. And this is the same system we use with our founders raising 8 and 9 figures, and I'm giving it to you completely free. I'll drop the link in the description below. Download it now, and it'll save you months and months of guesswork and false starts. But for now, let's keep going, because step 3 is where the real capital acceleration begins. Okay, this is the campaign execution playbook. So raising $100 million is not a pitch contest. It's not Shark Tank. It's a coordinated investor campaign, and if you treat it like anything less, you're sunk. Here's how we structure it. Week 1 and 2, finalize materials, shortlist aligned investors. We call it our hot list. Week 3 and 4, launch coordinated outreach. Week 6 to 8, diligence, FOMO, second meetings. Week 9 to 10, soft commits, term sheet review. Week 11 to 12, close legal, and wire. Use a 3-tier system. Tier 1, dream investors. Tier 2, solid match. Tier 3, backup strategic fits. You start with Tier 2 to test narrative and gather feedback, then roll Tier 1 when you're warmed up. Create urgency by stacking meetings, controlling timeline, and communicating momentum weekly. Now, these are some advanced execution tactics. At this level, the subtle things matter. Nuance matters. Here's what separates 7-figure raises from 9-figure raises. Early interest strategically to create leverage. You want to create FOMO using weekly updates, milestone hires, wins, press. Get multiple investors chasing the same terms. They'll speed each other up. Build in post-close value for your investors. Show them what comes next. What's on the horizon? You're not just selling equity, you're selling a front row seat to something that wins. Now let's talk about the 1-page summary template, how to craft your compelling narrative in 1 page. We want to talk about company overview, problem and solution, market size, business model, traction metrics, team highlights, funding ask, use of funds, and contact information. Squeeze it all on 1 page. We can give you some examples in the links below as well. But remember to tailor each section with concise, impactful language and quantitative achievements to make your raise summary truly compelling and investor ready. Don't make it just some slap on a piece of paper. You want it concise, to the point, something they're going to see within seconds. They're going to get it. Now, also in this download, I'm going to hand you a comprehensive term sheet negotiation cheat sheet. This is something you want to use once you hit the term sheet negotiations. Study this before. We talk about terms like valuation, liquidation preferences, board composition, anti-dilution vesting, pro rata rights, protective provisions, questions to ask the investors, so you're just not sitting back getting blasted. You want to ask the right questions as well. There's going to be red flags to watch for, negotiation tactics, must-haves, and nice-to-have term sheet checklist. Study these before you go into term sheet negotiations. You will be prepared, I promise you. Now, this cheat sheet is a guide. It's not legal advice. I got to say that. Always consult with a qualified legal professional before signing any term sheet. You'll know what's best for you. Your attorney will know what's best for you. Now, we always talk about the weekly investor update template. Keep your investors informed and engaged with a structured, high-value update. This template provides a framework for consistent communication, building trust, and maintaining momentum through your capital raise. Very important. I want you to pay attention to this sheet, download this document, review it, study it, use it as a guide as you're going into your raise. We talk about key metrics, milestones achieved, challenges and risks, upcoming priorities, financial snapshot, team updates, frequency, when you got to send this weekly, typically on the same day. Consistency is key. Tone, you want to be concise. You want to be honest. Why do I even have to say that? You should know that by now. Positive but realistic. Avoid jargon and excessive detail. Get to the point. Information to include, focus on progress, key learnings, challenges, and clear asks. Information to exclude, avoid operational minutes, long explanations, or overly emotional language. Now, I'm also going to give you some email templates that you can use to reach out to these investors. Again, you're not spraying and praying 500 VCs hoping you land one. You're going to use my mandate matching guide that I'm telling you, check size, mandate, have they funded in the past? Do they have the capacity to fund you at your current raise amount? So here are some email templates you can browse through at your leisure. It talks about the subject line, the opening, the value proposition, traction highlights, ask for the meeting, and closing. And you want to keep this short and snappy. This better not be 4 paragraphs long. They don't have much time to read your stuff. So precise, concise, to the point. Now here's some tips for success on these email templates. Personalization is key. The more you can find out who they are before you blast them, what they've done in the past. Hey, I saw you did a $200 million raise for XYZ company. That was amazing. We have a similar concept we'd like to show you. That type of personalization always wins. Timing and follow-up. Send emails at optimal times, Tuesdays through Thursday mornings. If you don't hear back, follow up politely after 5 to 7 business days with a brief value-add message, new milestones, relevant news. Avoid excessive follow-ups. Don't just regurgitate the same things. Conciseness and clarity. Need I say this again? Be respectful of the investor's time. Get straight to the point. Clearly articulate your value and make your ask simple. The goal of this first email is to secure a meeting, not to close the deal. Now, in this video, I touched on pitch decks, and they are definitely an important part of the fundraising process, especially at the institutional level, but you need to get your pitch deck right. In my time, I've audited hundreds, maybe thousands of pitch decks at this point, and recently I made this video right here where I go over some real pitch decks. I break down exactly what they're doing wrong and show you exactly how to fix it so you can actually raise the capital you need. If you want your pitch to land investors, I'll see you over there.